are in listen-only mode.
Good evening, everyone. Welcome. Thank you for joining us this evening. My name is Jillian Holmes. I'm the Manager, Marketing and Communications at Larlyn Property Management. After years of hosting live seminars for Board of Directors, Larlyn is pleased to expand their learning opportunities with online client learning sessions in the form of a webinar. I got a great thank you from Tuesday night's event in Alberta that said she watched it in her jammies and it's the best way to learn. So hopefully you guys are enjoying yourself this evening as well. Due to the size of our audience, you'll be muted. If you have any questions, please type them in the area provided where it says type message here down at the bottom of your control panel. We'll address as many questions as possible toward the end of Wendy's presentation if they haven't been answered already. And if we're unable to get to your question before our time is up, questions are being recorded and we'll be able to reach out to you personally to follow up. Wendy, can you advance my slide? Perfect. Our topic this evening is condo insurance, the basic claims process, including excluded perils, how to be prepared, and we'll share some claim examples as well. It's my pleasure to introduce to you our presenter for the evening, Wendy Wildeman, Senior Account Executive with Rogers Insurance. Wendy has been in the insurance industry for over 40 years and with Larlyn for 15. She helped pioneer our VIP Larlyn Advantage program, which has offered superior service and savings to our clients for more than 10 years. We are often asked by our Ontario clients why we work with an insurance broker from Alberta, and the answer is simple, because she's the best. I'm thrilled to have her join us again tonight. She'll be referring to a few slides you can follow along with as she shares her screen, and I think that means it's time to get started. So I'm going to pass it over to Wendy. Okay.
Thanks, Jillian. Thanks for the nice introduction. Thanks for joining us this evening and taking some time out. This is a really good program that I've had a great pleasure to partner with Larlyn in. It makes you all better board members, more educated on the situation and the fiduciary responsibilities that you have. As Jillian alluded to, our original broadcast was on Insurance 101. We're hoping to build on that tonight with more information with respect to claims. So let's start with the basic claim process. This kind of follows the way through for pretty much any claim. However, we've got some added values that we've put into this that benefit you as a Larlyn managed property under the Rogers VIP program that we conduct as a joint venture project with Larlyn. So when you have a loss occur, generally it's never at a convenient time. Could be in the middle of the night. We've had a fire. It could be a windstorm, hail, flood, tornado, whatever. It never happens at a convenient time. We first want to make sure that you take immediate action so there's nobody that is going to be subject to any injury or that there is any further loss happening to the property. By way of that, we mean like if there's a water issue that you've got a broken pipe or if you've got a sewer backup, that type of thing, shut the water off so it doesn't continue to run and do more damage to the property. If you need a 911 call because you have a fire or something like that, definitely call 911. Please don't call 911 from the building. If it's on fire, get out, take your cell phone and phone from outside of the building. If there's a fire alarm pull in your vicinity, if you happen to be in an apartment or an apartment style condo, then pull the fire alarm to make sure other people are notified. We talk about preservation of evidence. The reason why we want to preserve anything that could lead to figuring out what actually caused the loss to happen is really important to us. One, because we need to know what went wrong, but also if it was due to someone else's negligence, we could potentially have subrogation available to us. So let me explain that in layman's terms. Let's say, for instance, you had someone come in and install your dishwasher, and they crimped a line in the installation of it. You run your dishwasher, and then all of a sudden your neighbor below has the unfortunate mishap of having all the water come into their unit. If you have somebody come in and repair that and they don't keep that crimped line, that we can prove that it was an improper installation, we will have repaired all the water damage to the unit, your unit, the units below, wherever the water damage has found its way. However, if we can't prove it was through someone else's negligence, our ability to subrogate and go, and by that means by the insurance company's ability to recover their loss when what they've paid out for repairs from the insurance held by the negligent party, is somewhat handicapped. We are stifled in order to go back and prove that there was a crimp line, for instance, in my example. So that's what we mean by preservation of evidence. The unit owner typically would contact a resident manager or a property manager and let them know that they've had something go on in their property. If in fact your personal contents are involved, so let's say that it's a kitchen fire and we've got damage to the cupboards and the flooring and the walls, that would be condo property in most cases. But let's say the stove is destroyed, that's your personal property, and maybe some of the contents in the cupboards, again, your personal property. You would eventually have to let your personal broker know that you had damages. The property manager, by way of the Larlyn VIP program, has a list of pre-approved contractors. This is done to expedite the claim and get you back into your unit as quickly as possible in mitigating and correcting the loss as fast as we can. So let's just say that that dishwasher that I referred to earlier, it overflows at 2 o'clock in the morning because somebody's decided that they can't sleep and want to run the dishwasher. We don't have to wait for the claim to come into our office or get an adjuster appointed. The property managers or the resident managers at Larlyn have the ability to contact any one of the approved contractors that are on their list, and they all have a laminated card. I think most of them keep it with them at all times. If they get a call and they're on call in the middle of the night, they know that they can send out Love Now to come and deal with a water damage claim, let's say in the London area. If you're in Burlington, you might want to call out Strone. It's whomever is assigned to your area. They are pre-approved by the insurance company. They have a basic working knowledge of insurance, and they will start the work right away. Now, 9 times out of 10, it probably can wait till morning before we have somebody to come and start cleaning up. But if it's catastrophic and we need somebody to deal with it right away, absolutely, we have the ability to bring in a contractor in 24 hours. The emergency work is what we want to look after first. So if we have a catastrophic type loss whereby, let's just say a building has got a lobby and a car has gone through the lobby, and now we have the security to the building is compromised. The emergency work would include potentially boarding it up, or we may even have to have a security guard to come on and stand guard until such time that we can make the building secure again. All of this is covered and is expected under your insurance policy to make sure that you protect the building so further loss doesn't happen. Generally, by way of email or the next morning, we'll get a phone call from the property manager. They'll let us know that something has happened. We'll find out what steps have been taken. We have pre-approved and what we call control adjusters in each of the regions. It's a firm called Crawford and Company. They are an independent adjusting firm, and they have people in various towns all around southern Ontario into, well, actually right across Canada. But in particular, we're most concerned with if we've got an adjuster on the ground in London. Do we have one in Burlington? Do we have one in Mississauga? And they will be able to look after and orchestrate the loss for you. The adjuster's work is basically, they're a middleman. They collect information. They ascertain what the quantum of the loss is by way of the scope of the work to actually be performed. They will do a coverage review. they will write a letter or an email of recommendation to the insurance company, and the insurance company will look at their notes to see what their recommendations are. So they will pretty much be able to determine kind of out of the chute whether or not it's an insured loss, which is one of our first questions, but also what the course of action is, what the next steps are, what they will be able to let you know what the deductible is, that type of thing. Please understand that it's not the adjuster's job to tell you, yes, you have coverage, or no, you don't. They are there as an agent acting for both the corporation, but they also have to report back to the insurance company. It's ultimately the insurer that will make the determination of whether it's a covered loss or not. Through all of this, we're going to work with contractors and ask them for a scope of work. They're going to determine what needs to be replaced. If it's back to my dishwasher analogy, we've got drywall that's been damaged, maybe the ceiling in the unit below has come down. We've got a lot of water to suck up in the emergency, but then in the restoration, they're going to give us a breakdown of what exact work they're going to do. If it exceeds a certain dollar amount, we might go and ask for another contractor to bid it out. But again, it's in the control of the adjuster and the insurance company. The adjuster quantifies the loss and submits the proof of loss and final report to the insurers for payment. So now we've got the bill in from the drywall contractor, the painter, whomever. It might always be, might even be one restoration company if the claim is minor enough. And they will then work in conjunction with the property manager and or the board, get the proof of loss signed, and we will get the checks. The corporation is responsible for the deductible at all times. By way of your standard unit bylaw, you may or may not have already passed. You may have, the board may have the ability to lay the deductible off on the offending unit owner, and we'll go into that a little bit more in depth. The point I want to make about this part is that the application of the deductible to the unit owner is strictly something between the corporation and the unit owner. It's not for the insurance company to chase. It's not for them to say, well, I don't have insurance for it, therefore I'm not going to pay it. If you are guilty of an act or omission and you have that bylaw, it's up to the corporation's board to determine whether or not they're going to assess the unit owner with it. So when we get a claim, there are two answers that we've got to get. One is it the corporation's responsibility to insure the property that's been damaged? So this is really important because we need to refer to the standard unit bylaw. Many of you, and I hope all of you, have recently passed in the last few years your standard unit bylaw, which determines what is condo corporation's property to insure and what belongs to the unit owner. So let's just refer to an actual bylaw, and this one's fairly short and to the point, but it does cover what we need to know. So in this situation, the corporation has passed this bylaw, and it's outlined very detailed as to what they're going to insure. The floor to the subfloor. They're going to get you your electricity back. They're going to have all your interior partitions, what you're going to get in your kitchen, bathroom, fireplace, and it's always going to be at builder's grade. Why it's important to pay attention to this, especially if you're going to buy into a corporation, is if you're in an older building, and let's say the previous owner decided to really trick out their unit and take out the arborite countertops, the melamine cabinets, and the lino on the floor, and put in solid maple cabinets, granite countertops, and hardwood floor, the cost of any improvement, and let's say this is our set of bylaws that we're referring to, the cost of any improvement over and above the builder's grade is yours as the unit owner to hold insured. Now, if, and I hope you all do, if you buy personal insurance, not only will you get protection for your contents in the unit, you will get protection for the improvements and betterments. Just kind of make sure you know what the cost of that might be. How do you determine that? maybe ask a contractor, maybe ask the previous owner. You know, I've even seen people go walk down the aisles of Home Depot and try and figure out the cost of different things so they can figure out what, in fact, the difference between the lino and the hardwood would have been. And remember, we're only talking about the cost of the improvement. And I'm just going to make it simple math. If the lino was $5 a square yard to put in, but hardwood is $25 a square yard to put in, then the cost of the improvement is not the $25, it's $20, because the corporation would still be responsible for that original $5. If you refer to the balance of this, it talks about other components. We have to be into the regulation. It then talks about improvements. The last paragraph on this one, it says, in any circumstances, the insurance coverage provided for repair or replacement for catastrophic loss, as defined in the insurance, the unit owner shall be responsible for the deductible portion of the corporation's insurance. Now, this bylaw goes a little further. It just says, if whatever the circumstances are, except for a catastrophic loss, if the loss happens to your unit, you're on for the deductible. So if we have a water damage deductible of $5,000, and in the case of the faulty install with the dishwasher, that means the unit owner would be responsible for that $5,000. Now, that seems like a big nut to crack. However, in your personal insurance policy, there is the ability to collect that under your own personal policy. So the assessment of a deductible as applied by the corporation is recoverable through your own personal insurance. Now, you would have to pay your own deductible, which is possibly $500, but at least you're covered off for the difference between your deductible and the corporation's deductible. So now we have to determine, now we've determined that the property is the unit owner, or sorry, is the corporation's responsibility to hold insured on behalf of the unit owner. So that's our first test. Whose property? Now we're going to say it's the corporation. The next question is it what happened? Is it a covered peril? So typically, when we're talking about losses that are going to fall outside of insurance, our number one exclusion that comes into play most often is going to be a water exclusion. And this is the actual verbiage out of a policy, that it says we're going to exclude seepage and leakage, influx of water, however it comes into the building, especially a crack in a foundation, if it comes in through a sidewalk, that type of thing, that is excluded. You can't buy it. You can't buy it under condo corporation. You can't buy it under your personal policy. And I have some claims examples at the end of the presentation that I can walk you through exact claims, like real life examples of that. The next exclusion that has to do with water is the entrance of rain, sleet, or snow through doors, windows, skylights, or other similar wall or roof openings. Now, when I say that, if you left the window open and went to work and there was a huge storm and the water came in through the window and it damaged not only your personal contents, but now we have damage to the drywall and possibly the hardwood flooring or laminate floor. Because there was no aperture concurrently or directly causing the water to come in, we just left the window open, that's not covered by insurance. You can't buy it, and it's a standard exclusion in any insurance policy. However, when we talk about a concurrent causation and an aperture, that's an example of that would be if there was a windstorm and a branch broke the window and water came in through the broken window. Well, windstorm caused the branch to come through, which subsequently led to the water damage. That's going to be covered by insurance. So again, just leaving the door or the window open, no coverage. If something happens whereby the door or the window are damaged or broken, and that's what causes the water to come in, then it brings it back into coverage. Some other standard exclusions under an insurance policy are wear and tear. Because remember, insurance is not a maintenance vehicle. It's there for your catastrophe. It's for that which you don't expect to happen. We don't expect to have a hailstorm. We don't expect to have a flood. We don't expect to have a short in our wiring and have a fire. We do expect to have wear and tear. So your insurance policy isn't going to pick up standard wear and tear. Rust or corrosion, that's another excluded peril. Under the wording, now I kind of cracked up because this really isn't a peril, but one of the excluded items is loss of use or occupancy. What does that mean? When you have a property loss, let's just say, for instance, you've rented your unit out. It is not the corporation's responsibility, nor is it covered under the corporation's insurance policy if you are unable to rent your unit out for a period of time while it's under restoration. So in the case of the branch going through the window and does all kinds of water damage to the unit, if I own it and I've rented it out, I need to insure that myself. I need to buy an insurance policy, maybe attach it to my own principal residence insurance. Maybe I have a bunch of them and I have to go to a small commercial policy. But I have to insure my loss of revenue and to protect myself. It's not covered by the corporation, nor is it the corporation's responsibility. Another peril is pollution. So we're not expecting to pick up a pollution claim if an example of this would be if you had a generator on your premises, you're in a large high-rise, and the diesel tank ruptures and we have to now go dig up all this contaminated soil. That's not covered by a property policy. If you buy a pollution policy, you can buy coverage for that, but it is a standard exclusion under a property policy. Thanks to Osama bin Laden, we now exclude terrorism coverage as of 2001. You can buy it back in, but heck, we're in Canada, and we don't really see a need to buy it back in. The last two that I have as examples are mold and asbestos. So if we are doing, let's say we're going to do some renovation and we open up a wall and we find it's full of mold. That type of mold is not covered by insurance. If, however, that the line to the dishwasher broke and we weren't home, and we have water damage, and by the time we get to it 2 or 3 days later, because maybe we went away for the weekend, mold has occurred concurrently with the water damage that is covered, then the mold remediation is covered by insurance. So just purely finding mold, not covered. Mold that is concurrent with a sudden and accidental release of water is covered in the insurance remediation. Now, I'm not asking you to wait. Like, we want to deal with water as quickly as possible, because the longer it waits and the longer it sits around, the more options we have, or the more opportunity we have for mold to grow. It just makes it a bigger mess and a bigger problem. Same with asbestos. Asbestos is excluded from any insurance policy, and asbestos is kind of scary. However, it's not scary if you don't disturb it. So I used to live in an old house in Winnipeg, and I had a gravity-fed boiler in my house. It took up a whole room, and the house was over 100 years old. It was covered with asbestos. However, it had been painted, and as long as it was left undisturbed, the asbestos was not a problem. If you find asbestos, you can't just go out, call up the insurance company and say, I need you to remove all this asbestos and make it an insurance claim. It's not covered. However, through someone's wisdom, and I don't know the reason why, buildings that were built pre-1982, often we will find that they've used asbestos in the drywall mud when they were taping the drywall. So if we have a water damage claim and we know that the building was built during that era, the remediation people are probably going to do a test to see if there is the presence of asbestos. If asbestos is present, they have to go through a lot of health and safety in order to deal with that asbestos. They will only take out the damaged portion of the wall where the asbestos is. We're not going to re-drywall the entire unit or the entire building. We will deal with the asbestos only as it respects the damaged portion that is resulting from the claim. So while it is an exclusion, there are some times where it does get brought back in. So first we find out the property, then we find out what the peril is. And if both of those are, yes, we've got the property covered, it is the corporation's responsibility, and yes, we have coverage for that, it moves on into a claim. It's always nice to be very prepared. The adjusters like working with us and the Larlyn property managers because I've trained them all really well. And we need to have declarations. We need to have a copy of the current appraisal. Standard unit bylaw is a must. That probably should be the #1 thing because I honestly, I'm hoping that other provinces adopt what the Ontario government has done with respect to the standard unit bylaw. It has shortened the time frame in determining who's on what for a loss by about 50%. So instead of having 2 adjusters to come in, and let's go back to the kitchen fire, whereby we've got the stove damaged and we've lost our spice cabinets destroyed and maybe our pantry, have personal stuff. We also have improvements to it. Again, this would all fall to your personal policy. With the standard unit bylaw, we can easily determine what's corporation's responsibility and what unit owner's responsibility is. And often we're able to we can actually use the same adjuster to adjust and represent both policies. Never before has this been ever able to happen. So basically the adjuster can draw a line down the middle of the page and say, okay, we have flooring. The basic cost of the flooring is our $5 a square yard, and the Joneses have put in hardwood at $25. So of the $25 to replace this hardwood, $5 will be charged against the corporation's insurance, $20 will be charged against the personal insurance, and so forth until the claim is completely handled and settled. It makes life so much easier in handling a claim, and it's cleaner for both you as a unit owner, it's cleaner for the board, the property managers, and most of all the insurance companies. The insurance deductible bylaw, again, this is a great act of genius to put this in there because it now has the unit owner, they have some skin in the game. Prior to putting this in, you could only be assessed with the damage to your unit. And typically water doesn't stay put in a unit. So in the case of my dishwasher overflows, but all the water damage will go into the unit below. I couldn't be attacked for that deductible, attached with that deductible. It wasn't in the act. Now with the influx of these insurance deductible bylaws, if it comes out of your unit or it's due to an act or omission, however you choose to word it, I can be assessed with that deductible. So if I take that back into Alberta, we don't have such a thing in our act. We can put it in the bylaws, but if it's silent, we have situations where people were, for instance, and these are real life claims. I had a lady tripped as she was coming out of the bathroom and she had just bleached the tub. Well, she'd spilled the bucket of bleach all over her carpet. She got brand new carpet. The deductible was funded by the corporation, and she didn't have to pay a cent. I had another one whereby a grandma let her granddaughter paint her toenails on the white carpet with red nail polish, and she got brand new carpet. Now that we have wording where we can put act or omission into it and assess the deductible, it's amazing how much fewer claims we have. Contact information is very important. We need to know the unit owner affected, how to get a hold of them, so we can set up times to get into their unit. And we may need to get in touch with more than one of the unit owners. We need to know who the property manager is and how to get a hold of them. If there's a resident manager on site, if there's a concierge that we have to go through. All that information is important because if we can't get a hold of you and get into your unit, how are we going to be expected to make the repairs? So this is a form that all of the Larlyn property managers have, and it's, you know, our W's. I don't really need to know how right away, but I do need to know when, where, what, who, and how, and well, 2 who's. When did this actually happen? Insurance companies file everything by a date of loss. So the very first thing we're going to say is, when did this happen? Oh, it happened on April the 9th of 2015. Okay, got that. Where did it happen? Just don't tell me the unit number. I need to know the address. I need to know the condo plan number. Tell me that it was HCC6 or WCC20. Tell me that. And if it goes by a name, because some people don't know their condo plan, but they'll say, oh, I know I live in, Harris Towers, or I live in, and that's the name of it. Because we will log it in under all those names. Because if someone does phone here and ask us a question, we got to be able to find it. Tell me what happened. Tell me if it was a fire, or tell me if it was a sewer backup. Tell me as much information as you can, how many units were involved, what kind of damage we have. Again, who do we contact? Property manager, resident manager, unit owner. We need to know how we can gain access so we can get in there and not only do the emergency work, but also how we're going to get in there and do the remediation. We want to know who's attended. And why that's important is it lets us know what kind of action has taken place prior to our getting involved. So if I get a phone call, oh, we had a fire in a unit, a kitchen fire, fire department attended, and we've had first general out, then I know that we're already started down the path. If we've had somebody out that is not a preferred contractor, I can get the adjuster to get that approved, whether we keep that contractor on or if we get someone else out. When the flood hit Alberta, we had so many contractors out there that we were just happy to have someone sort of show up. And the fact of the matter, they weren't an approved contractor or didn't have a contract with any of the insurance companies, didn't matter. We just needed to get out there and get some emergency work done and protect the property. So that kind of went out the window. But typically we try to use pre-approved contractors. Always, there's our contact information. You can always get a hold of our office, and I travel with a cell phone sort of stapled to my hand, so you can always get a hold of me as well. So now what we're going to do is we're going to move into some real life examples of claims. Now most of these are water damage claims. I kind of focused on those largely because I'm going to tell you 85% of our claims are water damage related. And I know it sounds crazy, but we don't see a lot of fires. In Alberta, we see a fair amount of hail. In Ontario, we'll have the odd windstorm. But typically what we're seeing from condos, whether it be a townhouse project, a stacked apartment, or a high-rise, it's water. And in our subsequent session that we're going to put on in May, we're going to talk about mitigation and how you can help save yourself from having claims, which will keep your insurance costs down. So these are both Alberta and Ontario losses, and they're somewhat older. And if I'm talking about your project, forgive me, but I didn't name anybody's name, so we'll just carry on. So this situation was heavy rains caused storm sewers to back up. So the sewer backup isn't for just inside your building, but it's also for the storm sewers. The water, we couldn't take it away fast enough, and it entered 7 units. This particular property is right along the river. It's fairly high end, and we had a lot of improvements, and we had a lot of damage. The corporation's bylaws excluded any improvements or betterments made to the unit. We were called in to repair and replace the carpet, the flooring, drywall, etc., but it was all just to builder's grade. Anything that was by way of a personal item that was damaged or any of their upgrades, that was up to the individual unit owner. Now, in this case, 2 of the unit owners had substantial upgrades, but they didn't have any insurance. So unfortunately, when they were looking to replace marble countertops and hardwood floors, they were offered the builder's grade, and it was up to them to either take that or buck up personally out of their own pocket to replace that. This one was $312,000 for water damage, and it was fully paid by the corporation's insurance less the deductible. I don't know to the extent that the personal insurance were involved, but it was substantial as far as the damage goes. I'm just going to pause here for a second and just give my quick little analogy in what we consider corporation property and what is unit owner's property. The real easy test, if you were to be able to visually turn your unit upside down, what stays put is condo corporation. What falls out is unit owner's responsibility to insure, with the one exception of improvements and betterments. So depending on your standard unit bylaw, and most that I have seen will exclude any improvements and betterments, then that really is a good visual for you to sort out. So upside down corporation, that's the stuff that stays put except for improvements and betterments. Anything that falls out, that's the unit owner. One of the questions I get quite often is, well, I bought my unit from the developer and it came with a washer, dryer, fridge, and stove. So remember my analogy, if you turn it upside down, are those going to fall out? Yes, they would. So even though you did purchase them with your original purchase of your unit, they're still your responsibility not only to repair and maintain, but they're also your responsibility to replace in the event of an insurance claim. Okay, so we'll go on from there. This is a water damage claim to a townhouse. And remember when we talked about perils that were excluded? This was a seepage and leakage through a crack in the foundation. So the water actually seeped right through the basement wall. The claim was denied by both the corporation and the unit owner's policy. The standard unit bylaw made it very clear that the unit owner was responsible for all of the improvements in the basement because they had bought the unit with vapor barrier and insulation and a concrete floor. The total cost to repair the improvements paid by the unit owner, because remember, you can't buy this coverage under the corporation nor under your personal policy. That $11,000 came out of the unit owner's pocket. It was also up to the condo corporation because the foundation was cracked. It was up to the corporation to repair that or figure out what was happening with the seepage problem. Sometimes they're expensive. This one was only $1,000 to figure out what the problem was. I also have a personal story to share. I had a new build on a house, and all of a sudden one day I found this great big puddle in my completely unfinished basement, which was fortunate. What had happened is the dirt had settled in a negative slope towards the house. I basically had to have somebody come in and push all the dirt around, make it a positive slope so water would run away from the house. And not a problem. I didn't have water in my basement ever again. If that had been a condo corporation, the cost to move that dirt around would have been borne by the condo corp. So this was an example of a claim that was denied. Now, the next one, again in a townhouse situation, this claim was initially denied. Get the phone call, and this lady calls me in a panic. She's got 18 inches of silt and water in her basement. Her corporation is built on the side of a slope, and they have kind of a sort of a quasi walkout basement. So because of the hill, the basements are only partially into the ground, not totally into the ground. And she said, I had mud and water come in through my window. Well, right away we know if we have the entrance of sleet, water, whatever coming through a window, it's not covered by insurance unless we have an aperture. The window wasn't broken. But what we did find out is after asking a few more questions, the mud and the water had come down with such force down the hill because we'd had a heavy rainstorm. Construction debris had clogged the storm drain and sent all of this stuff cascading down the hill that the force of the mud and the water actually popped the window right out of the building. So while the window was still latched, it just took it right out of the building. So what we originally thought was water and mud coming through the window was actually water and mud coming through the side of the building because it took the window right out. Therefore, what we thought was initially not going to be covered by insurance, upon closer investigation, we then covered the loss. The corporation's insurance paid close to $34,000 on this, and the unit owner had to pay for the TV and the bed and the bedding and all the other stuff, the personal stuff, because it was a fully developer-completed basement, so it was covered by the corporation to insure it. Excuse me, I'm trying to stifle a cough. Okay, let's talk about a high-rise. Some of you might be in a high-rise. This was course, had to be on the top floor, and our unit owner decided he wanted new taps, and instead of paying for a plumber, he did it himself. The drain wasn't properly connected, and after running the dishwasher, the water went down 5 units below. Regardless of who was responsible for the plumbing work and him being responsible, the damage is still covered by the condo corporation's insurance. Now, let's stop there. If he'd had a plumber in and he paid somebody to do this, then we could turn around and subrogate against that plumber for not doing his job properly. But because he's a unit owner, we cannot subrogate against him for anything other than the deductible. And in this situation, there was a deductible bylaw in the bylaws whereby the corporation said, you are guilty of an act or omission, we're going to assess you with I think it was a $2,500 deductible. Balance of the repairs were paid in full by the corporation's insurer. This one is from Alberta. This is some time ago, and this was actually a really interesting loss. This had to do with crane toilets. Unbeknownst to anybody, for whatever reason, the ceiling in the lobby by the elevator collapsed because we had running water, and it had run for a long period of time. It was due to a cracked toilet line that continued to run for the whole day. The damages to the building were covered by the corporation's insurance, and the damage to the personal property was covered by the personal insurance. Literally, we were putting up the light fixtures on the freshly painted walls in the lobby when this happened again. And somebody else next door, their toilet let go again. So we were faced with a big problem because this had happened over, we had other occurrences, not nearly to the tune of nearly $90,000, but we'd had similar water damage. So when you hear us talk about protecting your insurance policy, we try not to put in the little frivolous claims, because if we put in 3, 4, 5, 6 claims, your insurance rates are going to go up and your deductibles might go up, but it becomes more and more difficult for us to find affordable insurance for you. So what we had to do in this situation is we worked with the property manager and the board, and they did a special assessment to replace all of the toilets. Now, at the time, the City of Calgary was offering a rebate if you put in these low flush toilets, so they were able to apply for that. This was a fairly high-end corporation. Each unit had 3 toilets, an ensuite, a main bathroom, and a powder room for guests. And so it got kind of costly. They hired a journeyman plumber who came in the evenings, because this building was filled with most people that were professionals and were gone all day. And they arranged to have all these toilets replaced. Because we were able to negotiate that piece of information with the underwriters, we were able to prove that the corporation went to great lengths to protect their building so this wouldn't happen again. We were able to keep their deductibles fairly reasonable, and we also kept any increase in their premiums reasonable. Had they not decided to go that extra mile and work on getting the situation corrected, we would have had very many insurers denying and not wanting to insure the building, because obviously there was a problem with these crane toilets. Not sure if we got one more slide. Okay, so that's the end of my sort of presentation. I hope I've covered enough to answer some of your questions. We're going to open it up to questions. I'll turn it over to Jillian, and I thank you for your time.
I had to unmute myself. Sorry about that. Okay, so now that we've covered basic terminology of condo insurance back in April with Wendy in part 1, responsibilities as members of the board of directors, now we'd like, and then today we talked about the basic claim process. Now, next we're going to discuss in May how to manage your risk and mitigate losses, talking about prevention, protecting your property, importance of contracts, keeping insurance rates low. So I do hope you'll jump on our website and register for that session coming up May 13th. And then later this summer, look for a downloadable e-guide that will cover all 3 events and put it into a nice illustrated booklet for you. So I'm going to open up questions, and we've got a couple so far. I'm just going to pull these up quickly. Where are they? There we go. Got some good ones. Okay, we have loss of use or occupancy. We were talking about that on the back in the excluded perils part of the presentation. What if the owner has to stay in a hotel during the repairs?
Okay, good question. If you've purchased personal insurance, whether you are a tenant or you are a unit owner, there's an extension under your personal policy called ALE, Additional Living Expense. And what that does is it generally gives you coverage up to about 10%, sometimes 20% of whatever you've purchased for your personal contents limit. So for illustration, let's say I bought a policy for $100,000. I would have an additional $10,000 to $20,000, depending on the carrier and how they've written it, for me to go and spend time in a hotel, or if it's going to be a longer period of time for the restoration, I might want to go into a short-term rental somewhere. I have a big loss happening right now that these people are going to be out of their units for the full year. So they went and rented different units elsewhere. So that coverage is afforded under your insurance policy that you buy personally.
Thanks, Wendy. I'm going to jump ahead to another one. You've talked about this in the first webinar. What percentage of owners do not have their own insurance?
Well, the last statistic that we had was that approximately only 40% of unit owners will buy insurance. I know it's kind of I can't hear anybody, but I know there's gasps, and there generally are. And what happens is there's 2 reasons for that. People don't, it's all funded in actually ignorance, and I don't mean that in a negative way. They just don't understand. They don't read the bylaws. They don't understand. They've gone into a unit. They don't think that their personal property is worth much. Oh, it's just, you know, a few couches and a little bit. I don't have a lot. And besides, the condo corp's going to look after me for my additional living expense if I have to live elsewhere. They're going to pay for my fridge and stove and washer and dryer that gets lost in the fire. And they just basically don't get it. They don't understand what the corporation's responsibility is. The next part is, you know, sometimes you've got young people that don't have a lot of income, or you have elderly people on a fixed income, and that might be something that they just choose to not expend their money on. Now, you can get these policies fairly reasonably. I mean, I'm talking like $15 or $20 a month to buy your personal insurance. I'm hoping that as a result of education, more people will go out there. And I know there's always a flurry. After there's been a condo fire, we get a phone call the next day and more people go out and buy insurance, because now it's in the press, and you know that the Red Cross has been there, and they've got them in buses, and 6 of the 10 units owners don't have insurance, and it always becomes a problem. So it's kind of a crazy statistic. If you go to tenants, if any of you rent your units out, I'm going to tell you that probably 5 to 10% of your tenants actually purchase insurance. Scary numbers.
Wow. Back to the excluded perils. Water leaks are excluded. What if the roof leaks enter a unit and damage owner's contents?
Good question. So the verbiage that we have to follow is a sudden and accidental release of water. So let's say we've had a windstorm, water comes in because the shingles have been peeled back and it comes into the building. Ice damming is another one that we've paid losses for, where the water comes into the building. The corporation is only responsible for the structure. They're not responsible for your contents. That's why you buy personal insurance. So again, as I said in the initial slides, if the claim that the damage that has happened has damaged both your property and the corporation's property, you need to let your personal insurance broker know. So in the event that the water's come in and damaged the couch, and maybe you had a silk bedspread or something like that, you have to talk to your personal agent.
Thank you. Are floor coverings always included in standard unit bylaws?
Another good question. Standard unit bylaws are as different as people are different. They all kind of look the same and have the same basic parts. However, they're all different. I have seen standard unit bylaws from everything from soup to nuts. They may want to include all of the betterments and improvements. They may want to include anybody's upgrades, to the very far extreme where I've seen them exclude cupboards, countertops, and all floor coverings altogether. So basically, after a loss, you're going to get your unit back from the insurance company for the corporation that's not going to have cabinets, countertops, or floor coverings. You're just going to have a bare subfloor. So to answer your question appropriately, you need to read your standard unit bylaw. It will clearly tell you whether you get builder grade carpet. I've seen in some of them it'll even tell you what color and what the ounce of the carpet weight will be. It will tell you that you're going to get lino in the kitchen, the laundry room, and the bathrooms. It's all dictated by the standard unit bylaw, so you need to be aware of that. And I would suggest that you take your standard unit bylaw and go and visit your personal insurance broker just to make sure you're not missing out on anything.
Are there any other questions? I haven't seen any come typed in. You can raise your hand or type in a question. Just double check. I think they've got it, Wendy. As usual, Wendy is definitely available after by email if you've got any further questions. We have recorded this presentation and it will be up on our website by the weekend. You can go to larlyn.com and click on, actually I think the link is about and then client learning. And you can find our webinars recordings there, as well as a copy of the slides from tonight's presentation. And then your property manager or regional manager are both valuable resources of your customer service team, so they can help you out with questions. And then there's Wendy's email address to reach out to her if something pops into your head after. And while I've got you, I can remind you of other learning opportunities that we have on our website. April's webinar, Condo Insurance 101, it was fantastic. Lots of great questions. If you weren't able to join us for that, it's definitely worth a listen. I learned a ton of stuff as well, even that applied to my own insurance as a resident. How to read your condo financial statements and condo budgeting, as well as ebooks. You can download those, print them, read them on your screen, share them. We've got one on the role of the board of director, the role of the property manager. We combined the financial statements, budgeting, and reserve fund study into 1, 2, 3s of condo insurance financials. And then another one called A House as a System, which talks about the building envelope. And then this summer we'll have another ebook on insurance. And I think if there aren't any more questions, I'm just going to double check before we sign off. Nope. Thank you very much for joining us, and hopefully we'll be back together on May 13th. Thanks very much, Wendy. Good night, everyone.
Thank you.